high emitters will be excluded from Bank of Korea's FX reserves portfolio. The Bank of Korea plans to phase out bonds and stocks issued by large carbon emitters from its foreign reserves portfolio, while increasing investments in firms that score well on environmental, social, and governance criteria. In a trial initiative, it will outsource some of its forex reserves management to funds that monitor ESG indexes, and subsequently use the negative screening mechanism for all of its outsourced FX reserves. According to the BOK, all high emitters or those with bad ratings based on independent ESG indexes would be barred from all of the country's currency reserves over the next 2 to 3 years. In the long run, the central bank will factor ESG considerations into its FX reserves investment decisions. South Korea is ranked 9th in the world in terms of foreign exchange reserves, with 464 billion at the end of August. Foreign exchange reserves cannot be invested in local assets. Beyond investing in ESG-themed goods as part of a forex reserve diversification, the Bank of Korea will progressively increase ESG investments by incorporating ESG considerations into all of its foreign currency reserves. It stated that its embrace of ESG investing reflects the rising need from public institutions for responsible investing in order to combat climate change and examine the effects of their management and investment. Sweden's central bank, the Riksbank, became the first in the world to leave public debt due to climate risk in 2019, unloading bonds issued by Australian and Canadian regions. The BOK has been investing in ESG-themed stocks through external managers since December 2019. It has made direct and indirect investments in ESG bonds, also known as green, social, and sustainability bonds, for its fixed income portfolio. As of the end of June, the Bank of Korea had 1.22 billion in ESG-themed equities and 5.9 billion in ESG-themed bonds. South Korea's sovereign wealth fund, Korea Investment Corporation, is one of the external managers of the BOK's foreign currency holdings. In addition to negative screening, the BOK will utilize positive screening to encourage investment in businesses with strong ESG scores and green bonds, which are used for environmentally beneficial investments. The Korea Economic Daily initially reported in April that the BOK was working on implementing negative screening for firms with a high carbon footprint. Sources familiar with the subject indicated at the time that the central bank would rely on Morgan Stanley Capital International's ESG ratings, implying that the BOK would avoid bonds or equities issued by businesses at the bottom of the list. The MSCI ESG ranking distinguishes sector leaders and laggards based on their ESG risk exposure and risk management in comparison to peers. It also assigns ratings to stocks, bonds, loans, mutual funds, exchange-traded funds, and nations.